Welcome to Kitco News. I'm Niels Christensen. According to analysts, gold and silver are looking a little expensive. Gold in particular is finding strong resistance around $2,000 an ounce. So is now the time for investors to look down the value chain in the precious metals markets? Here to talk about platinum is Trevor Raymond, head of research for the World Platinum Investment Council. Trevor, this is your first video interview with Kitco News. Welcome to the show. It's a pleasure to talk with you today.
Niels, thank you. Really appreciate it. And a good time to be talking about precious metals.
Good time to be talking about platinum. We've seen like the value between platinum and gold sort of blow out to their widest levels. The premium now, gold over platinum is well over $1,000. Does this make platinum an interesting value investment?
Niels, I think it certainly does. What you mentioned in your introduction, I think, is very relevant. What we've seen is that the gold price is hitting a psychological $2,000 an ounce level. But I don't think there's been a drop for appetite for precious metals and certainly for hard assets and alternative assets. So I think the increased global risk, people are still looking around, and gold is obviously in demand. What might have gone unnoticed is that in mid-March, when we had the sell-off of almost everything, all prices fell, so did gold, so did platinum. But since then, gold has rebounded significantly, but it's gone up by about 32%. Platinum's gone up over that period by 58%. And we've seen this before. We saw this in 2008. So I think what's interesting is that people are looking to say that gold might be pricey, but is platinum interesting? And I think platinum at half the price of gold is certainly interesting. So we see a lot more gold investors looking at platinum as either a proxy for gold or potentially something that might outperform in the short term for a host of reasons.
But it seems like there is some hesitancy to jump into platinum. Why is that? I mean, and we actually have seen healthy investment demand for platinum for most of this year. You've mentioned, when we were talking in Q1, unprecedented levels. But it does feel like we're not seeing the uptake. You look at how investors sort of embraced silver sort of in that value chain in the precious metals markets, and now it's outperforming gold. We're not really seeing that in platinum. So what do you think it's going to take?
I think the key reason any of your investors that invest in gold might look at platinum and say it's predominantly an industrial metal. But the interesting thing is that in terms of the industrial use of platinum, there's fairly balanced supply and demand. What we've seen is COVID impacting the automotive sales, but the loss of platinum demand from reduced auto sales has almost been balanced by the loss of supply out of the predominant supplier, Southern Africa. In terms of investment, gold ETFs are up about $49 billion this year, or about 20%. And if you then look at the platinum investment market, that's only gone up by about $90 million. So platinum is a much smaller market. Far fewer people look at it. But the real important thing is that only a small amount of additional investment into platinum can make quite a big difference to the fundamentals. And I think that's what's going on at the moment, is that there are some significant demand growth drivers of platinum demand, but for the investors looking at this, significantly interesting just in terms of the amount of investment dollars that are allocated to platinum. So I think the biggest driver that's likely to change things is actually investor interest and flows of investor dollars.
Mm-hmm. Well, you talk about the supply and demand fundamentals of platinum. Let's take a look at that. I mean, is that it feels like COVID-19, like all commodities, has sort of turned everything upside down. And I'm sort of wondering, does platinum get that back? I mean, what are your forecasts for surpluses and deficits for in the supply picture for platinum?
So what we forecast in May was that there'd be about a 250,000 ounce surplus in the platinum market this year. What we've seen since April is about 400,000 ounces of investment demand going into ETFs. And Niels, the interesting thing about that is it's not just the usual suspects. There's been a lot more new investors that have never held platinum before that we believe are using platinum as a proxy for gold. We've also seen some issues with the NYMEX futures market and liquidity. So when the north of Italy was so badly affected, the refineries in Switzerland were closed, and it wasn't possible to get metal in the right form into New York to deliver against NYMEX futures. And we saw some significant premiums in the futures market over spot. So what we believe has happened is that there's been a lot of investors that might have traditionally looked at futures that have been looking at ETFs. So I think that flow is interesting. And as I said, the loss of automotive demand is almost balanced by loss of supply in South Africa. So then you're looking at the next three things that are likely to make a difference. And COVID has changed those. COVID has given us a taste of what clean air looks like. So having low emissions vehicles is important, electric and fuel cell gives platinum a long-term demand underpin. Equally, the diesel vehicle emits 35%, the mild hybrid diesel emits 35% less CO2 than a conventional gasoline engine. So I think there'll be more diesel cars on the road. And the other key difference is that you might have seen in the palladium market. Palladium is still trading at a significant premium to platinum, and rebalancing in that market has been going on over the last few years. Johnson Matthey have confirmed they can use platinum in place of palladium in catalysts and are already putting auto catalysts onto cars where that has happened. And BASF has confirmed that they've done the testing of gasoline catalysts that contain platinum instead of palladium. So that big game changer, together with the investment flow, is, I think, what makes platinum so perspective. And if we go back to 2008, what we saw there is that the significant loss of vehicle automotive sales was offset at that stage by significant jewelry demand growth. And that's what kept the platinum sentiment positive as well as constrained supply. And what we've got right now is nearly 830,000 ounces of platinum were imported into China by industrial manufacturers and jewelry manufacturers. So the market is extremely tight. China has imported that metal. So it's looking very similar to what happened in 2008. So the outperformance, the weekly returns of platinum from 2008 to 2010 were between 30 and 65% higher than those of gold. And as I said, we've had gold go up by 58%, platinum go up by 58%, gold only up by 32%, and it certainly feels like that has legs. So quite interesting for gold investors to be looking at platinum.
Do you think we'll ever, looking at platinum, do you think we'll ever see platinum prices at a premium to gold? I mean, or is the world changed so much that, gold is going to be the more expensive metal?
Well, Niels, I spent over 18 years in gold, and for most of the last 45 years, platinum has traded at a premium to gold, and it kind of makes sense. If you look at gold and platinum, platinum's just as precious. The only reason it hasn't been around for 3,000 years is the melting point. So you've got something that is just as precious, that does fantastic things to solve problems in the industrial arena. So to have platinum at a premium to gold kind of makes sense. It's just as precious plus this good industrial. But what's hammered it over the last 4 years, or even over the last 9 years, was Dieselgate. Diesel reputation certainly took platinum down, and there really was no need to look at platinum. But I think now you've got a situation where hard assets, something that's not correlated to other assets, gold is the least correlated asset. And right now, I think the correlation between the price of platinum and the price of gold since COVID started has gone back to about 0.7. So anybody looking for a diversifier, platinum's providing that to them. And if there is this re-rating and you get the kind of performance we saw in 2008, platinum makes it very interesting. So no, I don't think the change in the world that has been quite profound, and who knows what normal will look like again, I don't think the demand for precious metals has gone away. And certainly platinum is more likely to head towards where the palladium price is than stay at half the price of gold. So I think that there's enough industrial reasons for platinum to be seen as completely mispriced. And certainly from a precious point of view, catching up with gold just makes so much sense.
Well, and this is something that we've talked about offline as well many times, is that, the reality is that the world is not going backwards when it comes to emission standards. The world is not going to ignore sort of climate change anymore, and platinum, as you said, is going to play a bigger role. Is this, like, I guess, do we need to pay more attention to the long-term fundamentals rather than the short-term price action?
Certainly. I think the one thing that has changed during COVID, you've noticed that the costs to sovereign governments of COVID is huge, and I still think indeterminate. So what the world needs is to try to secure the clean air and improving climate change, but with as little cost as possible. And that's why I think you've seen so many governments come out recognizing hydrogen as an alternative fuel. It is sustainable, and they're putting effort into that. And if you get hydrogen supporting primary power generation and transportation, I think that's a game changer. Now, platinum sits in that sweet spot. You can use platinum to convert water into hydrogen. Platinum iridium electrodes are used, and that's small volumes in the short term. But heavy-duty trucks certainly are gaining traction and will be a serious demand. But I think the longer term, the sort of 5 to 10 years, there will be battery electric vehicles, but there need to be fuel cell vehicles, and there need to be clean diesel vehicles as part of that mix. So I think suddenly you've got a store of value argument for platinum that you perhaps haven't had before, that the next 10 to 15 years, platinum seems to be really, really important to the most cost-effective way of addressing climate change. And I think if you've seen all the policy on hydrogen, that's moved. And in the short term, heavy trucks and trains, certainly that's where the platinum demand will be going into fuel cells.
So I guess bottom line is we just sort of have to get past the supply issues, the supply and demand issues of COVID-19 for platinum.
Certainly. Well, I think the interesting thing is that the supply is concentrated in Southern Africa. Elsewhere, it's a byproduct. But in Southern Africa, obviously, addressing COVID is still a very real issue. Supply is down. One of the largest producers had a converter plant offline. It took out about 550,000 ounces of this year's supply. So supply reduction has almost offset the loss of autos. And what we're now looking at is something that looks balanced at an industrial metal basis, but certainly with significant potential for investment demand.
So obviously, next month you're actually going to be releasing your Q2 report. I'm looking forward to those numbers. Just before we go, I mean, just really quickly, what's the health of the platinum market, do you think?
I think, yes, as you say, we on the 8th of September we'll release our view on what happened in Q2, which was quite fascinating. I think vehicle sales seem to have been weaker. Investment demand certainly has been stronger. And one other strange thing is that I mentioned the logistics of Switzerland, but international travel was part of that. And what happened is that because of this gap between the futures price and the spot price, there's been in fact, I think in the month of July alone, there was 190,000 ounces of platinum in 50-ounce bars that moved from either Zurich or London, were converted into 50-ounce bars and delivered into New York into NYMEX vaults. So those were investors that said, I never really wanted to own platinum by being long, or I never really wanted to deliver platinum by being short. But they rather chose to deliver the bar than take that massive spread difference. So this has tightened up the market. You've now got a few 100,000 ounces of platinum 50-ounce bars backing the futures trade. I think that will increase confidence in that futures market and might see increased long positions. So I think that's quite appealing to that market. And in terms of the health of the market, I think the challenges of getting platinum out of the ground in Southern Africa haven't gone away. They've been aggravated by COVID, but still there's a lot of metal available, and the metal's in demand for the long term. So I think the industrial side of that market is very healthy, and to put an overlay, it is a physical asset, it is a precious metal, and certainly it's a risk hedge. And I don't think that's going to go away anytime in the next year or so, Niels.
That's perfect. Thank you very much for your time and talking to us about platinum, Trevor. It's a metal that doesn't get a lot of attention, but I think just with the spread between platinum and gold, it is something that investors should be paying a little bit of attention to, especially if they're looking for value.
Well, I appreciate being able to talk about the smaller volume metal, but certainly perhaps the one that's a little more precious at the moment.
Excellent. Well, thank you very much, and we'll talk again in September when you release your Q2 report.
Thank you. I look forward to it. Thank you, Niels. Bye-bye.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.